All right, this is kind of shocking to me. The conclusion of this study actually caught me a little bit off guard, and I find it quite alarming. And really, if the mortgage and real estate industries needed a cause to get them jacked up to take it to their business for the betterment of your business and your personal finances and your communities, this is it.
Institutional investors may control 40% of the U.S. single-family rental homes by 2030, according to MetLife Investment Management. A group of Washington, D.C. lawmakers say that Wall Street needs to back away from the market.
So I want to just take a step back here and explain this. We are not building as many single-family homes because we're building more rental properties and apartments. Okay, so we are already turning our ownership capabilities into renting opportunities for people, turning it to a country of renters. We're going to have a larger portion of rental properties and fewer single-family homes. These institutional investors are going in and buying new single-family homes. So if we have 40% rentals now and 60% home ownership, and a couple years from now, we have 60% rentals and 40% home ownership, and 40% of those 60 are controlled by institutional investors from Wall Street. That means upwards of a full 50% of all properties could be controlled by Wall Street. And that is bad. If real estate agents and lenders were to just get mad, get organized, and get motivated to crush this, you totally could. There's nearly 3 million licensed real estate agents in this country right now, for which 1.6 million are realtors. If you just took it to those that represent the interest of Wall Street, there wouldn't be enough oxygen in the room for these guys to operate and exist.
Wow, that was a lot.
Along these lines, there's a new term that's now being bantered about.
Yeah.
That's forever renters.
God.
According to the Fed, 24.7% of
millennials
will always and only rent, with that number only increasing due to current conditions. And here's the biggest long-term problem that will erode the foundation of our country.
And it really will, guys. Renters, as a rule, are missing out. The reason is simple. One of the keys to generating family wealth, the average net worth of a homeowner in 2019 was $255,000. For a renter, $6,300. Wall Street is coming after your equity.
So this is nothing short of Wall Street jumping in front of the line and depriving folks of the ability to build wealth. And like always, this will disproportionately devastate those who can least afford it, the poor and the underserved.
All right, so Joanna, the whole thing is, what do we do? That's what you should be asking yourself right now. Well, there's a couple of things. Use the links down below. The first is a link to congress.gov, and it links you to the Stop Wall Street Landlord Acts of 2022. This needs to be reintroduced. Talk to your representatives at NAR, at the NBA, at NAM, or any other association that you're a part of, and get them to work on this darn thing. Then write your senator and your congresspeople. The links are down below. And tell them that all this crap that's going on with Wall Street and our houses, it needs to stop. They are utterly eroding homeownership opportunities for Jane and Joe Americans.
And finally, roll up your sleeves and get to work.
Yep.
Focus on work. Get angry about work. Mobilize.
Right.
Make this your cause.
Totally.
Trust us, everyone likes a cause. This is a good one, and a cause is the best, and I mean the best marketing tool any lender or realtor could have.
Yep.
Your pocketbook will thank you.
It will. Now, on to other news. There's a lot of this going around right now. A lot more coming, too. It's happening all over the place. Remember the implodometer from years back? All right, well, Home Point Wholesale shut their doors, as the list of non-banking mortgage entities continues to grow at an alarming rate. Question is, when is this thing going to end? They just announced last month that they lost $164 million. So I guess the writing was on the wall, right? Now here's the funny thing. These non-bank institutes suffer the same fate as loan officers and even real estate agents. They just have more zeros behind their transactions. They go up like rockets in great markets, and they come crashing and burning down in bad ones. That is, of course, for some of them. Others, like LOs, weather the storm and do pretty well. A good rule of thumb here, people. If you work for a publicly traded company and you start to see quarterly losses with 9 digits like we just saw with these guys, you might want to brush off that resume a little bit. And like those LOs who can weather this torrent storm of 2023, they're going to find more deals and fewer competition when we punch through.
So I see this slightly differently than Brian. I say don't wait.
Okay.
Right now is the time. It's a great time to brush up your resume. Not to be fatalistic, just simply to be prepared for unseen events, because in this industry, those are the ones that really hurt.
Yeah, that's true.
So be prudent. And if you need help, you can always head over to ChatGPT to build out your resume and cover letter. According to theforge.com, 78% of ChatGPT users got the interview.
Did you see that, South Park?
ChatGPT? Yeah, dude. There's a bunch of apps and programs you can subscribe to that use OpenAI to do all your writing for you.
People use them to write poems, write job applications.
All right, and you might want to make contacts on LinkedIn. Yeah, it's still a relevant site, especially for account executives in the wholesale realm. Now, here's the big one. This market screams. I mean, it screams for better, deeper relationships, not necessarily more relationships. Everyone's heard the metaphor. A large, shallow pool of water is probably not clean water and won't nourish you.
Nope.
A small, deep pool of water is usually keen and will sustain your life, and in our case, your business. Deep relationships, friends, not more. Spend the next few months working at cementing strategic relationships because you never know, and I mean you never know, black swans, when lightning is going to strike or opportunity will arise. Your relationships will help you with this. This approach will open more professional doors for you than the typical stupid land grab approach with prospects in relationship where we collect people like baseball cards.
I mean, I think you and I could both say every job we've ever worked was due to some sort of long-term relationship we had.
Absolutely.
Yep.
Absolutely. And I'll tell you, whenever we find ourselves in situations where we need something to break for us, it's those deep relationships that always work. It's never the fly-by-night people. It's slow right now. I get it. But it doesn't mean that we need to let moss grow on our feet. What we need to do right now is work at things that are going to help us in the long run. Deep relationships. Looking at new technologies, reading books, these type of things. This is where we need to be right now. So jump on that. Make that your goal for the next quarter. See what happens. I bet you'll find business that comes out of it. Hey, I want to say thank you to everybody who came to our last webinar with Mike Farr. It was absolutely fantastic. He knocked it out of the park, and we had incredible engagement. So thank you. We've reached out to all of you who were there, and you should all have a copy of that presentation. Listen, this upcoming Thursday at 11 o'clock Pacific Standard Time, Mike Farr is going to be talking about leadership. Right now in 2023, it is a contact sport. You don't want to miss this. This upcoming Thursday, the 13th, Mike Farr, leadership, the contact sport. All you have to do is register right down below. It's free, and it will make your year better.